Okay, so the journal entry to close an expense account is, I said C. Debit. Yeah, debit the expense account, credit the income summary. By accident, but you're supposed to B, debit the income summary and credit the expense account, because that. And then I got number 8 wrong as well. If a business received $2,000 from sales, this would, and I said D, decrease assets and decrease owner's equity, but that can't happen because you're decreasing both sides. The equation needs to happen up and down. And so I think the right answer would be increase your assets. So if you have cash, it would increase your cash, and then it would also increase your owner's equity. At 13 wrong as well. Numbers below were both balances of Mayfair's trial balance as of December 31st. Determine the balance in accounts receivable. Well, in the equation, the accounting equation, this all on the left side, assets should equal whatever's on the right side. And I said, I answered B, and then the correct answer is actually D. Bank statement shows that checking account balance is $5,500. There are outstanding checks for totaling $600 and outstanding deposits $400, and a bank service charge of $15. The cash account balance should be. What I did was I did it right up into the point where I subtracted the $15 of the bank service charge, which you're not supposed to do because that's in your books, not the bank statements. Bank statement right here in the beginning of the question is saying that they only want what the bank is going to see, not what you have in your books. So you're not going to subtract the 15. So the real answer is A. Yeah, 15 wrong as well up here. All the following accounts are permanent accounts except for, and I said the office equipment, but office equipment is a value, so it's an asset, and you want to keep your assets from month to month, and then your capital will only be zeroed out if you are bankrupt and you're gone, so then that's going to stay as permanent. Accounts receivable is also permanent because you want to get your money back no matter what time of the year it is. It doesn't just go away. And then the real answer is advertising expense. What I did wrong on the balance sheet is that with the capital and drawing, I listed the drawing, and you're not supposed to do that. You're supposed to have a fixed capital where you would take the drawing from the capital and just have it, so it'd actually be just $5,000. If you look, I did that before and then second guessed myself and rewrote it. So then that messed up these two, and then this would be double underline down here, like what this person has written down, and that is it. Okay, I messed up a little bit on the journal. So in the first one, I put investment because it is an investment, but that's not what the account is actually listed as. The account would be actually on equity or capital, because that's affecting, it's going right to your capital and it's going right to your cash for your assets. And then on number 6, and I said merchandise would, but for it to be merchandise, it would have to be going up because you're gaining merchandise, and so it's actually going to be your cash, which is in the credit columns, would be going down, and then your purchases would be going up. Same thing with the number 11 with merchandise. The opposite should be just actually that's the capital because that's your drawing from your business. And then I tried to zero out insurance expense, which would, the way to zero that out would be try that as an income summary. And then over here I messed up with the $108 and $180. I got those mixed up a little bit. And then Okay, then I messed up from 14 down because for me to zero out what I want to, what I did wrong in this multiple choice problem earlier is you need to debit the income summary and then total expenses and then list the expenses as the credits. That's why down here, at the very bottom, the income summary is circled and it's wrong again, and the capital is wrong, and then the drawing, they're just all out of place. Okay, so what I did wrong here was the income statement, all it does is it is revenue minus your expenses. And then that finds out your net income, or if you have a net loss. And so why it's circled up here is I put assets in there instead of just revenue. Revenue would entitle just the sales. And then the sales over here has to be this has to be right here, is in the credit column, and then this would be the sales, like would all be over here instead of your assets. So that's not the actual numbers that are supposed to be there. The sales numbers would be there, and then you'd also have the totals of your sales, the double or the subtitle underline, not the double, just one. And then again down here, it has to be total expenses, not just total. You're totaling everything up, just the expenses, and then this would be total revenue up here too. And then the reason I have these numbers wrong, this is 25% and 75%, is because I did it right in a way if I was following the right way, but I had the wrong numbers in there, so these are actually wrong to the right answers.